talked a lot about, or maybe not a lot, but you started talking about Bitcoin, given the recent crash and kind of the economic situation, et cetera. What are you kind of thinking about that today? And I think you even had some Bitcoin, but sold it at some point. Is that right?
Yeah, I owned it in a fund, so I didn't own it directly, but I got rid of the fund before any of this business started. I just got rid of it for Bitcoin reasons, not for coronavirus reasons. But I'm no expert on Bitcoin. And I wouldn't give you financial advice even if I were. But I'll just tell you what I did. What I did was I held Bitcoin as sort of a hedge because it seemed like it might go up. I laughingly said that I was going to own it to stop other people from getting rich without working, because I was watching all these people getting rich without working, and I thought, well, I could stop that right now. I'll just buy a bunch, and it was the last day it went up. Basically, I mean, it's bounced around, but and I actually sold it for, I don't know, 20 or 30% gain when it popped up for a little bit. But it never really was the Bitcoin of old. It wasn't the Bitcoin that was doubling every few days or whatever it was doing. So yeah, in a jokey way, I say I killed Bitcoin by buying it, and I actually announced it when I did it. I actually said, "This is the end of Bitcoin. I just bought something." I wasn't even joking, because I think I somehow have an uncanny ability to sense the end of a good thing. Sometimes I realize it and sometimes I invest, but I have this uncanny ability to say, yeah, now's the time. Oh, based on my experience, when I'm saying now's the time, that would be a good time to reconsider being in this at all. So I knew I was getting in late, took a little gain, got out. I don't recommend you get it or get out. I was interested to see if it tracked gold as a safe harbor, but it didn't. And it didn't do it in such a visible way that it would be hard to maintain the argument that it's a safe place to put money in a crisis. It's definitely a different place to put money. So if you're just somebody who wants to diversify, you can make an argument for diversification, but I'm talking about 5% of your portfolio, not 50%. So that's the only financial advice I like to give, is diversification, because that's universally just always a good idea.
Yeah. So the one thing I think that it's not so much convincing people. The one thing that I think is happening, again, kind of how you caveat and say not with 100% certainty, but I think that the liquidity crisis that a lot of the investment community has gone through over the last really 2-3 weeks. I did this research on what happened to gold in 2008. And gold over the summer of 2008 went down about 30%, but it ended the crisis up from kind of start to finish up about 3x. And what it looks like when you kind of look with hindsight bias and 2020 visions, in hindsight, is that the liquidity crisis, anything with a liquid market got sold, everything went down in kind of value as those sellers tried to exit. But then when the government responded with all the monetary stimulus, et cetera, people then ran back to gold, right? And it kind of ended the crisis up. Again, history doesn't always repeat.
But that's opposite of how it's supposed to work. Gold should have gone up during the crisis, but when the government made good moves to end the crisis, gold should have gone down, but it went up. So that tells you it's not a safe storage in an emergency. It's just operating the same as stocks. In your example, I'm not giving anybody advice here. I want to be clear on that. I'm just saying that your example proves that gold is not a safe storage. It doesn't prove the opposite.
Yeah, and I think my point here being that if you kind of look at what's happening now, right? What happened in 2008, liquidity crisis, gold draws down. We're seeing gold draw down again now. It's down 10, 12%, whatever it is. Bitcoin's obviously down about 50%. So again, it doesn't mean it's going to happen again, but it looks very similar to kind of that liquidity crisis in 2008. So, we'll see what happens. But how do you think about kind of your other investments? So take out the highly speculative stuff like a Bitcoin, et cetera. How do you generally think about investing, given, you've got kind of multiple income streams and building a business and the books and all of that? But it'd just be interested to how you, at least framework wise, think about.
Well, in terms of stock investing, diversification is the only word I like to use, and it's the only thing you need to do. So if you're buying an unmanaged stock fund or a spider, as they're called, it's a different form. But if you go for a low fee, large grouping of stocks that you can buy with one purchase and you own the whole basket, if it's a broad index like the Fortune 500, that's where I put most of my money. Then you have the same fate as the country, basically. So you wed your success financially to the United States. So if the United States does well, you're going to do well, guaranteed. It can't go any other way. The stock, that basket of stocks just moves with the country. Now, historically, that's always been a great investment. Now, of course, the person who invested in that one stock and they made a lot of money, and you think, well, I can do that too. No, you can't. No, you can't. If you don't believe me, because, cartoonist, I get it. I do have a degree in economics and an MBA, as I said earlier. But if you don't believe me, just Google it for yourself. Do a little research. Should you, as an independent investor, buy individual stocks? 100% of experts, and again, this is rare to get 100% of experts in the same place, but 100% of experts will say, no, you shouldn't do that because you don't know anything about these companies. That's a risky thing to do. There are some exceptions. A company like Apple or Amazon or Berkshire Hathaway, they sort of operate like a fund themselves, or they might have a monopoly. In the case of, Amazon, I hate to say it, but it's basically a monopoly. iPhone is basically a monopoly, not illegal monopoly, but it works that way. So if you have something that's gigantic and distributed and acts like monopoly, maybe a little bit of your money there. But even Apple could have some kind of shock that takes it out of business that didn't affect your other stocks. Anything could happen. We've, name the number of successful computer companies that don't exist. Hello, Gateway Computer. I mean, you could be surprised even by big companies. So diversification, period. But if you're in a position where, you have a good sized portfolio and you want to see if you can get some kickers, with your, let's say, the 10% that isn't going to ruin you if you guess that wrong, then you might go into some funds of some industries that will be good in the long run. I recently sold off some biotech fund I had, before this ugliness started, so it was good timing. Just got lucky. But is biotech going to be a smaller industry in 10 years? Probably not. I mean, but you should still diversify within that industry. And I call them the kickers. It's the thing that could go up 400%, and it did. I think I had a 400% gain on that fund. But that's rare. I also had for a while a fund of the oil companies, because here's my thinking, and this perfectly displays why people are bad at investing. I said to myself, well, there's one thing that's not going to change. Oil is going to be hard to get, and will be expensive. Supply and demand, we'll always need more of it. It's hard to get. The supply might be more restricted. It's the easiest investment in the world. I'm not even betting on an individual company. I've got a group of companies. Of course, that industry is going to be fine, except that it isn't. And then Putin decided that oil should be $20 a barrel or whatever the hell he's doing. And suddenly the shale business collapses and the industry starts, melting. Now, could I have seen that coming? Maybe some people were smarter and saw it coming. It's possible, but it was a hard one. So that's why it's so important that even if you're getting a little, 10% of your portfolio, if you're putting in these even funds of an industry that's the most solid industry you've ever seen in your life, can all change tomorrow. So that's where diversification is your friend.